excite you guys. You guys heard from me a couple weeks ago, but again, I'm Wes Bryan with Modern Shore Insurance. I started my insurance agency a year and a half ago, and things are great. We moved into a new office, great view. We actually have windows now, which is nice. So it's not all just dark and gloomy in there. Um, I kind of wanted to talk to you guys today because insurance has a huge negative vibe right now. I don't expect to change that perception in this, quick little 8 minutes, but I will be reaching out to some of the insureds in here that have used my services to kind of shed a little light and brighten up the space a little bit because I think there'll be all good responses. I hope so. Maybe a few bad ones, but I'll accept that. Um, I do want to kind of dumb down insurance for you. There's a big issue right now with carriers that run insurance history reports. If you are purchasing a new home and you're getting homeowners insurance, these carriers are looking at your history of insurance. It can change your premium. So if you have, and these are certain carriers, Citizens does not do this, although they can. Um, they don't, their premium is not affected on that. But many of the carriers are. And what happens with the insurance scores is they're just using your date of birth and your prior addresses. So a lot of people have issues with that because they don't understand it. But you can see a difference of a 20% increase in premium if you have had lapses in coverage, late payments, history of claims. If you're jumping around from carrier to carrier, that kind of puts a ding on your insurance score as well. It's not a credit score. So everyone needs to understand that when you provide that information, it's an overview of everything that you in your history of insurance. So remember when you are shopping for auto insurance, which is the biggest hop around thing that you can do because it's every 6 months. If you are switching to save $100 here and there and constantly switching, that gives you a bad score. The other thing is claims, frequency of claims. Even windshields, if you have 3 windshield claims in a year, that can negatively affect you in future insurance purchases. So kind of keep that in mind too. Obviously, things happen. Windshields are probably the biggest claim, auto claim that are frequent because rocks, you can't control them, or just any cracks or anything like that. And it's state law that you have to replace a cracked windshield. So if you do see a crack or a chip in your windshield, make sure you do get it corrected, but don't do it 3 or 4 times a year. The other thing I want to discuss is for homeowners insurance. We have an awesome resource here in Dawn Caesar who will do a wind mitigation inspection. If you have not had one done in the last 5 years, I encourage you to get one done just to see what credits you have. Also, it'll give you an overview of your roof. Brian will tell you, if you're gonna need a new roof or it's kind of coming down to the end of the life, the carrier will non-renew you if your roof is over 25 years old. Now that's with Citizens. There are carriers like Florida Peninsula who are 20 years on shingle roofs. And then there's many carriers that are 5 and 10 years on shingle roofs. So that number is asinine to me, but that's what they're doing. And a lot of these carriers are really tightening up their underwriting like that so they can dump policies without having to basically say that they don't want your business anymore. So they're making it a little more difficult than that. But if you run into that situation, there are ways around it. But oftentimes it's best to get a new roof if it's reasonable because it's going to open you up for more carriers and better rates. In most cases, we are seeing individuals only have 1 or 2 options on an insurance policy or new policy. And that's because of the underwriting, the age of the roof, the age of the dwelling is a big one. So there's a lot that's changed over the past couple of years. I think we're going to see it even get a little harder after they reevaluate the Ian situation. So we are not coming out of this anytime soon. Rates are never going to go down. And I'm not saying, but you know, if you go to the grocery store and you pay for eggs and they increase $2, they're not going to go back to $3 or $2 of what they were. They're going to stay at the rate they are. Insurance is no different with those situations. So I think in all, we are going to see a more positive side of insurance once it kind of levels out with the claims.
Most of the things are near and dear to my heart. Cliff does the insurance my employees. I mean, I don't know much about insurance. Cliff's passionate about it. And I've had two situations where two of my employees will be in a lot of trouble had we not had Cliff doing our insurance. So that's why I obviously highly recommend him. And for that, Cliff, thank you.
Thank you. Cliff Pugh with Health Markets. I'm the health insurance specialist. I represent over 360 different companies nationwide. I'm in 13, 14 states now. I do group insurance. I do under 65, do on exchange, off exchange, Medicare, life insurance, accident, heart attack, cancer, and stroke. Where do I start? Let's start with group insurance. If you're an employer and you have 4 or more employees, you can get group insurance. There's 2 different types of group insurance. There's just your traditional group insurance where what the plan costs and how much your claims go through. There's another one that most brokers don't talk about. It's called level funded. There's 3 buckets of money. What the plan costs, what it costs to function, and the claims bucket. As the owner, at the end of the 15th month, after the 12 years lapse, any money that's left over in that claim bucket goes back to the business owner. That's called a level funded. Brokers don't sell it because they don't make as much commission on it. My job is to get the business owners to making more money, get them an opportunity to look at these plans that are level funded. Let's talk about under 65. So if you're an individual and you're in the marketplace and you're using a tax credit, and you're looking at these plans and it seems like the bronze plan is always paying, you're always paying for your deductible up front. That's the base plan. These plans are designed for you to pay your deductible as you go, and you're gonna hit your max out of pocket, $7,000, $9,000. If you do a silver type plan, you're gonna have co-pays for seeing your doctors, your specialists, and that type of things. Then you get into your gold. You're just paying money to have a gold plan, you're wasting your money, because these silver plans are gonna be a better fit for you, save your money for an accident policy. We have accident policies. When I talked about it last week, and I even have a client of mine that had an accident. You guys may not want to hear it, but it's a brutal story. His Corvette was on the side of the road, it broke down. He walked back to his house 2 blocks away. Tow truck driver came up. They're trying to pull his car away from the curb. He has 1 foot inside the car and 1 foot out. The tow truck driver with the winch is hitting the button going forward, his foot slips. Goes underneath his back tire. Broke him like a wishbone. I got a phone call from him 2 days later and I went to the hospital to see the guy. Broke his pelvis, just almost completely took him in half like a wishbone. The insurance policy I had on him covered his insurance because I put an accident rider. He didn't have to pay for any of his insurance claims. His whole episode, it was about 14 weeks all in all between all the surgeries before he was 14 days before he got out of the hospital. I had an accident rider. He spent 24 hours in the hospital, so he got $10,000. He had hospital confinement. He spent 14 days in the hospital, got another $25,000, plus he didn't pay a dime out of his insurance. These are type of plans that are out there. If you've never done a policy review with me or sat down with me, like Adam says, over a pint, I'll still talk about insurance. I was watching the football game on Super Bowl Sunday. I watched the guy get hurt, and my wife goes, I know, if you had an accident policy, you'd be okay. I also do Medicare. I truly believe this is a good spot for me because I want to help people, and I've watched people time and time again get put into a plan that doesn't help them. Or I get a phone call from a lady going, my aunt got in trouble, she answered the phone, now she has a new plan. Well, I can take care of those situations. I represent every major company in Florida for Medicare. I look at things differently. I look at things as if I'm the one who's sitting across from the table. I take my time to be as thorough as possible. And when you look at people and they look to you for advice, and you get the thank you so much. I didn't have to pay my deductible. You know, I have a heart attack policy. If you get a heart attack, you can get up to $100,000. Paint a picture for you guys. You're in a hospital. There's a curtain between you. There's 2 of you sitting in a hospital. You both had a heart attack. One has no heart attack insurance, one does. And I come up to both you guys. I give one of you get well soon. I give you a get well soon with a $50,000 check in it. Your level of stress has gone down. The bills at your home is being paid. Your truck payments are being paid. You can relax and have a better chance of getting out of this sooner than later than the guy on the other side of the curtain going, I don't know when I'm going back to work. Wife is worried, bills are coming due, you're maxing out your credit cards. So there's a plan for everyone, for every situation they're in. And I am as thorough as I possibly can be to get this done. Cancer policies, I have cancer policies. You get internal invasive cancer, you can get between $5,000 to $100,000. You may not be able to stay in Florida. Moffitt is number, out of the top 50, Moffitt is 26. It's right smack dab in the middle. The number one's up in Minnesota, the second one's over in Texas. You may have to leave Florida to go get your cancer taken care of, depending on what you need. Not just a cancer treatment, how much is it gonna cost for the new lifestyle? Do I need a nutritionist? Is my diet gonna change? Am I gonna be in a hotel room for 6, 8, 10 months to get this cured. I can solve a lot of problems, but I can't do it if you don't get in front of me. So a good referral for me would be any one of you that wants to sit down and let's talk real about insurance. Guys have a good day.
Good job.